Hello guys, in this video, I'm going to share with you trading strategies based on price action. This means that I'm not using any indicators at all. So if you want to learn more about this, make sure to finish this video and don't forget to like and subscribe to the channel so you don't miss new updates. In simple terms, price action is a trading technique that allows a trader to read the market and make trading decisions based on the recent and actual price movements rather than relying on technical indicators. But can a trader really profit in trading by just using price action? Let's find out. For today's video, I'll cover 3 simple but profitable trading strategies that only use price action. So without further ado, let's dive into it. First in my list is trading price action with support and resistance. Basically, in this strategy, we just need to draw key levels in the chart and we are good to go. Look at this chart. We can see that the price continues to go down. After a while, it goes up. That zone where the bounce happens is considered a key level of support. Now we will wait for the price to go back to this level. After reaching the support area, it creates a bullish engulfing pattern, and the price rallied upwards. This is a great trading opportunity. So do we trade this? First, wait for the price to go back at the support level. Once the price reaches the support, start looking for a bullish candlestick pattern. For this example, we have bullish engulfing. Then we will trade it accordingly. We will place the entry on the candle close of the engulfing bar. We put our stop loss at the lowest point of the support and set our profit 2 times higher than the stop loss. There you go, another successful trade. But take note guys, I didn't trade this because it bounced in the support level and formed a bullish candlestick pattern. There is one more thing that I consider, and that is the size of the candlestick. Now, look back at the chart. Observe as the price is approaching the support level. Have you observed that the candlestick is getting smaller? When the candlestick is approaching the K level, make sure that the candlestick are getting smaller. This means that the momentum is decreasing, and that's what we want as the price is nearing the K level. Now, what will happen if the price approaches the K level with increasing candlestick? Take a look at this chart. We can see that it produced 3 successful bounces on the support, but the next attempt failed. Not just that, the candlestick is getting bigger as it approaches the support level. This means there is a strong momentum that pushes the price even lower, and that is what we want to avoid. Let me give you another example. Look at this chart. You can see that it formed a resistance area after 2 successful rejections here. Now it is going back to the resistance area again. As you can see, as it approaches the resistance area, the candle size is decreasing. Once the price reaches the resistance, it produces multiple hanging candles, which indicates loss of momentum, and we will trade this. After the multiple hanging candles, a bearish engulfing candle appears, and we would like to trade that. We will then place our entry on the candle close, put our stop loss on the highest point of resistance, and target 2 times the risk. And just like that, we now have another successful trade. Just remember guys, you have to check the candle size before placing any positions to avoid entering a false signal. So that is the first strategy. But before we proceed to the next strategy, if you guys like what you see, please hit the thumbs up and leave some good comments. For the next strategy, I will share with you how to trade using market structure. Market structure consists of support and resistance, swing high and lows, but for this strategy, we will maximize trading the swing high and swing low. But first, let me demonstrate what these are. I want you to understand the market structure because this is the concept in technical analysis that you can't shrug off. Whatever time you jump in, you can always see these and you can always use these. Look at this illustration. In any trend, the market shows a series of highs and lows. In an uptrend, you can spot 3 highs and 2 lows before the market reverses. For downtrend, you can see 3 lows and 2 highs before its trend is done and prepare for reversal. To better understand, let me give you an example. Check this chart. You see we have an uptrend right here. After reaching the 3rd high, the price printed a bearish engulfing candle, which is a strong signal for reversal. But we will not place our short position yet. We will wait for that to confirm that is now entering the downtrend. Later on, it printed a doji followed by a bullish candle. Couple of candles later, the price printed a bearish candle showing a strong downtrend. Now this confirms that we really are in the downtrend because it failed to create another higher high. We will now trade this setup. We will place our entry on the candle close to the bearish engulfing, put our stop loss on the previous swing high, and set our exit at the next bullish candle. Now, let me give you an example of a long position opportunity. Look at this chart. The downtrend here created a series of high and low, and it just finished completing the third low. After a set of candle bars, the price created a bullish engulfing candle, thus failed to create new lower lows. The bullish engulfing pattern confirms that the price is heading for an uptrend. We will enter the candle close, put our stop loss at the recent swing low, and set our target up until the next bearish candle. Here is a tip for all of you guys. Keep practicing. Practice will help your mind get used to seeing the market structure. Last on my list is Trendlines. I'm going to incorporate trading decisions with Trendlines breakout. In a previous video, I've shared with you different strategies on Trendlines. Now, we will use that knowledge to spot trading opportunities in the market. Look at this chart. We can draw trend lines here. In this scenario, we will use the breakout and pullback strategy. We will wait for the successful breakout of the price, then wait for the price to retest the broken trend line. Then, we will place a position on a bullish price action pattern. And in this case, is this hammer right here. We will place our entry on candle close. Then place our stop loss on the last swing low. And for our target price exit, we will measure the base of the channel and copy the same measurements as exit price. Now, we have a successful trade. Let me give you another example. Check this chart. On this high, we can draw a straight trend line. Now, connect their lows and create a diagonal trend line. This is a bearish pattern. In this pattern, we will use the breakout and pullback strategy. We can see at this point the price broke out of the trend line with a massive candle. This is a strong breakout that signals downward direction. Now that we have seen the breakout, we will then wait for the price to retest the previous broken trend line. We can see that this is an inverted hammer and it's a bearish candlestick pattern. We will place our position on candle close, draw our stop loss on previous swing high, and measure the base of the price pattern as our target. There you go. We have a successful trading position right there. We can actually mix these three strategies together. It will give us high probability trades as it provides additional confirmations. I just dissected them into three separate trading strategies as they can also be used that way. This gives you a broader view and greater understanding on how each strategy works. As a beginner, you should first focus on mastering one strategy, then proceed to the next one, and so on. Once you master all strategies, you can incorporate them together and form a strong and balanced trade setup. Consistency in practice and learning is what will make you a better trader. Now, if you like this video, please hit the like button and subscribe to our channel so you don't miss any videos like this. Until next time, see you.